In today's video, we're going to be talking about a classic franchise, Applebee's, and that's a full service restaurant that has cemented itself as a pretty big brand in the space that has been having some troubles over the years, especially in light of the pandemic. So we're going to go through the franchise costs, how much it costs to open an Applebee's, what the return profile is like, and if you were to invest today in Applebee's, about how much time it will take you to get your money back. So definitely stay tuned in today's episode if you'd like to learn about Applebee's and to see if this brand might be one for you to consider if you're looking to get into the food restaurant space. So it's a casual dining offering, salad, chicken, pasta, burgers, riblets, one of the largest casual dining brands with $3.1 billion in sales and 12% of the casual dining market share. As of the end of 2021, there were about 1,600 restaurants in all 50 United States, as well as Puerto Rico, Guam, and 11 other countries. About 95% of the restaurants are franchised, with 31 franchisees who own an average of nearly 50 restaurants. So the largest franchise owns 29% of the US restaurants in the Applebee portfolio. And the largest franchisees, when you look at those 31 franchisees, they own 76% of the system. So I'll say straight off the bat, this is not a suitable investment for a single unit operator. This is for generally someone that has great years of experience in the food and beverage business and maybe has been operating under another brand and might have expertise on the real estate side and might even be owning the building that the Applebee's is going to be operating on. As the payback period is quite long, we'll dig into that. They compete with all different types of big brands in the full dining, as well as even the fast casual segment. So indirectly competing with Chipotle, Five Guys, Panera, Panda Express, and then competing with brands like Chili's, for example, on the sit down and Denny's to a lesser degree. The initial franchise fee to get started with an Applebee's is going to set you back $35,000, and you're going to have to pay this upfront before opening one up. Now, to open one, $2 million to $8.2 million. Yeah, you've heard me. $2 million to $8.2 million to open up an Applebee's. A big part is the training. This also includes the purchase of the land. So you would own the land, the build out, the building, all of that goes into the total cost to open up an Applebee's. And they require that you have pretty deep financial background, minimum of $3 million net worth for a single location. And you gotta have 1.5 million per restaurant if you're looking to open up 3 or more locations. So they also require $1 million just cash or stocks, liquid assets available if you're just doing one store. And then $500K per store if you're opening up 3 or more restaurants. You gotta verify that with bank statements, brokerage statements. They'll ask you, and you have to have the ability to get conventional bank loan, SBA loan, or potentially partnering with a private equity firm that would do a built to suite opportunity. So that's where they provide the funding. Instead of paying $300K to $3 million to purchase the land, another $1 million, $2 million to the build out, furnishers, and everything. They give you a final product and you come in to run the business. So that could bring the investment way down to say $400K to open up an Applebee's, because you have a private equity fund generally that would be doing a built to suite where they're getting you the business ready to operate, everything that is required for you to operate a business. And then you own the business generally outright 100%, but you do not own the real estate, as what I believe the majority of Applebee's franchisees do, where they own the real estate as well as they own the business. They want tons of restaurant experience. This is really for sophisticated operators. They require an extensive business plan that you present to them. And then just going a bit in terms of just the ongoing fees, 4% royalty, which is below the industry standard at 5.3, the average, I should say, of the restaurant industry. And then the advertising campaigns a bit high at 4.25%, but with that 4.25% and thousands of franchisees, they're doing a ton of marketing on your behalf nationwide. The median franchise sales is $2.6 million. So let's imagine you invested the midpoint at $5 million and you're making a 13% profit margin. You're keeping, you have EBITDA of $343,000. It could take you about 16 years to get your initial capital back, that $5 million you invested. You're also going to have expenses on the real estate, and you also have the benefit from the real estate if you sell that while you're currently running the business or down the line. So Applebee's, unless you're getting some amazing benefit from the taxes, the real estate, or some other benefit, it doesn't make sense. Or you do the built to suite option where a private equity fund gives you the business and you invest just $400K and you're making $300K a year. It's got to be a particular situation for you to consider an Applebee's, and it's definitely for a sophisticated operator that probably has already been managing 5 to 10 plus restaurants, perhaps of an independent brand or another franchise brand. So the restaurant itself, we estimate it would sell for about $1 million. If you're making $2.6 million with your Applebee's, you could probably get $1 million for it, maybe 1.5, or the multiple will go up if you're selling a portfolio of, say, 10 Applebee's. That's just for the business itself. So if you're also selling the building together and the land together with the business, then the valuation is going to go pretty high, and it's just going to depend a lot on the local market conditions as well as just how well your business is doing. Applebee's, the franchisor, is doing quite well. They made $25 million in net income in 2021. So I don't imagine them going anywhere over the next few years. But in terms of system-wide health, they've been losing in 2021, net loss of 20 stores, 2020, so the first year beginning of the COVID pandemic, lost 63 stores. So keep in mind, there's some opening and some closing. There was a net drop of 63 locations in 2020. And then going back to 2019, a loss of 28. So something to track. If you keep at that rate, the system won't exist in 50 or so years. So they definitely need to curtail that and start having net unit growth, and understand if it's existing franchisees that are opening up subsequent locations, or if they're bringing fresh blood in to open up locations. That's an important thing to ask the franchisor. Also ask them about the built to suite option, see if other franchisees are doing that, have had success with that, because you could substantially bring down your investment capital. Instead of investing $2 million to $8.2 million to open up an Applebee's, potentially partnering with a built to suite provider where you're just operating the business, you could invest significantly less money to own a Applebee's. Hope you found this video informational. Leave a comment if there's other franchises you'd like us to do reviews on, as well as you could also shoot me an email if you're listening to this over podcast. Patrick@vetedbiz.com is my email address if there's another franchise analysis you'd like us to review. Thanks.